Hey everyone, Dan here. We are about a half hour after market close on Friday, July 23rd. We're going to take our daily look at SoFi. Before we get into it, if you enjoy these videos, please hit the like and subscribe button. It helps a lot. And also keep in mind that these are my own thoughts, opinions, ideas. These are not meant to be, nor should you take them as investment or trading advice in any way, shape, or form. Do your own due diligence, come to your own conclusions, and make your trading decisions based on that information. All right, so SoFi coming down a bit more again today, a little over 2%, moving down a smidge in the after hours at the moment, but that could easily be sorted out. Volume clocking in back down to sort of the lowest level that we've seen in quite some time, now clocking in under the raised par average 3-month volume. Just over 10 million today. And so the thing that I've been sort of shouting about that we need is volume. Now today in the video, just to give you the lay of the land, we're going to go through the chart relatively quickly, and then we're going to go through some lockup info relatively quickly because I'm so tired of talking about it, and you can just refer to my video on it if you want to do the deep dive there. And then we're going to go into the data on dark pools and how that may impact SoFi now or in the future. And in any case, I think by way of just folks getting more and more deeply involved in the markets and information and data that's available to them, I think that it's valuable to have these tools in your tool belt so that you can go to them at times that do become relevant, even if that isn't now. But we'll go through the things in that order. So here on the daily, quickly, basically we see this nearly 100% retracement. We still see ourselves staying off of this most recent low. So, I'm hopeful that there's still something to be had there. As you know, I grabbed up a call yesterday as I was bored in the car, and that expired out of the money today, which was fine. It was few dozen dollars. It wasn't anything that was going to make or break the bank, but it was fun to kind of take a little chance and just not worry about it. I talked through that in depth yesterday. We talked about the double bottom here and then sort of how it had double bottomed again later in the day. Obviously, then we fell through. I did think, it could be worth taking a look at where we are on this most recent retracement. It seems like we are just forever caught up in retracements with SoFi. And obviously we had that big impulsive move up the other day, and want to take a look at our retracement levels here and see where we are. See if we might be in an area that could be sort of making sense from a bounce perspective, or at least a stabilizing perspective. And then if so, let's take a look at what extension levels could look like. So here we see ourselves bouncing today off of the 786, yesterday bouncing right off the 681. So it is following this, fib retracement pretty solidly from the impulsive move that we saw a couple of days ago. Now, if this can hold, this could be a nice potential setup for an extension based on this being the first retracement down. So let's pull ourselves back out and see what that could look like if it's able to effectuate next week. Now on the fib extension, we go down here to where the impulsive move started, and then we take it to where it topped out, and then we take it down to where it settled. Now where it would settle, if this is in play, would be down here today. I'll reach this 1544 level. I'm going to turn this white so we can see it a little bit easier. And so if this stands, then, I would be looking at working ourselves easily back up over the 1687 level and getting ourselves closer to the 100% extension level, which would put us then just over $17. And then if we can, effectively make that happen, then I'd be looking at these upper areas here. But first would be that. Now I know that this is speculative and this is a fib retracement and extension, so just keep that in mind. But I like to bring different tools into these videos and not just always look at, the MAs and the MACD and the RSI and talk about how those could play a factor, but it is good to have different ways that you can look at the charts and decipher them and see how those play out over time. And then you keep what works and you ditch what doesn't, and you go with that. And sometimes I've found that certain things, for whatever reason, seem to read or work really well on certain indicators. So certain stocks respect certain indicators better than others, in my experience. So I often trying to figure out, like, how is this one working with this indicator? How is this one working with this indicator? And is there any sort of pattern that I can establish here that at least gives me a better chance at making a trade go in my favor than not? And just keep in mind, nothing is 100% of the time. We're trying to catch some of the move most of the time. All right, that's sort of the goal that I always have in mind. So there's where I would be looking at, next week, if we're able to get some bullish action going. Now, obviously, if we can't, so we come back down to this 1549. I would first hope that could hold. If not, then we're looking down 100% retracement from this nice big green day that we had to 1510, then lining us up for, another, I guess, like foray, trek into the dip buy zone that I had in this purple box where it bounced off of last time. But I don't like going to those wells too many times, because eventually the buying pressure dries up. Now, on the lockup side of things, this is, I don't know how many people have written to me with info that they got from various places, but this person sent me this screenshot today. I don't know this person. I don't know if this is a photoshopped image. I don't know, but he basically just sent me this really quick note on Twitter, and this was his conversation that he had. This would, point to the end of June date that is also supported by the investor that emailed me and the early employee that wrote to me that said that their shares were unlocked at the end of June. But again, I don't know any of these people personally, and I can't particularly vouch for them. I still have my email out there to SoFi Investor Relations, asking them just very directly. There's a lot of confusing info out there. The SEC documents seem to just further confuse people and are causing the debate of end of June versus end of July. Can you try to shed some light on when this initial lockup period expired and sort of what's remaining to be unlocked or expired in the future? So I'm waiting to hear back from them. They have opened the email. I can see that. So tick tock. Now, quickly looking at the short data, not much to see. So says Ortex. Current short interest percentage of the free float, just over 1%, down a bit today. So still looking like not a ton going on there. Utilization relatively low, less than 25%. Now, we're going to get into dark pools. Now, if you're not familiar with dark pools, that is sort of like a colloquialism, a modern trading nomenclature term that has been adopted. But basically, these are trades that happen in the dark. They don't, supposedly, they don't impact the public chart or trading that we see here. So large firms or institutions or funds or what have you could purchase or sell large quantities or blocks of shares of a stock and not affect the price based on that, enormous trade alone. Obviously, the utility there being that if they're buying something, for example, that they're not constantly having the price pushed up because they're trying to execute a large buy order. And so the ask keeps getting raised and raised and raised and raised by sellers. And same thing on the sell side, the price doesn't plummet as they're selling it. Now, I understand why that would be beneficial to them. My question is, how not beneficial is it to retail, or sort of like the folks that are always kind of in an underdog position as it is? Does it make sense that if funds or institutions or whomever wants to execute, trades that are in the millions of shares, that they shouldn't impact the public perception of the price, and it shouldn't have to go through those same channels? Is it not fair that if someone wants to buy 3 million shares of a stock in an afternoon, that should raise the price? I kind of think that it should. But, share your own opinions in the comments below if you'd like. But I'm sort of like debating with that in my head quite a bit. All right. So dark pools, like I said, that's kind of a layman's term. It's been adopted. a layperson's term that's been adopted. The exchanges and the regulators and whomever call them alternative trading systems. You see here, alternative trading systems. And here's where it's going to get really interesting, I think. There's ATS and non-ATS. So there's an alternative trading system and there's a non-alternative trading system, which makes it sound like it's just the regular trading system, but that's not what it is. So we're going to go through all of these things and talk about it. Now, if you want to dig through all of this on your own, which I suggest anyone do with anything that we talk about, just put this URL into your browser and, have a field day. Enjoy your weekend by digging through the finra.org website. Now, so from here, I go to OTC data, and basically they say after you click that, there's like this thing you have to agree to that's like, I won't use this data to decide anything about how I'm going to trade a stock because I know that this is information that's supplied to Finra but can't be verified in any way, shape, or form, and so on and so forth, just giving themselves a bunch of disclaimers on the data that they're providing. So, SoFi here. Now, what we're looking at is the ATS issue data. All right, so we're looking at total shares, total trades that were completed during the week of 6/14, ticker symbol SoFi, and just seeing what shows up in the alternative trading systems. You could double check this by Googling it, but I think last I looked there were 59 registered or reported, or however they phrase it, alternative trading systems. So it's not like there's just one place where dark pool trading happens. There's several different systems that perform them. And so SoFi here, you see in the week, not the month, not the quarter, whatever, the week of June 14th, there were a little over 2 million total shares traded on the alternative trading system. All right, so keep that in mind. Now, if you click on the details here, what you basically see, I think, are what ATSs, that these happened on, the ATS description, and then the shares of each of these and the number of trades that happened on those ATSs. So you see a slew of them there. Now, keep going further. You take a look here. Now, just to kind of clarify, there are these 3 tiers that you see here, right? I didn't want folks to be confused. So just looking at what these mean, NMS Tier 1, stocks included in the S&P 500, Russell 1000, and selected exchange-traded products. NMS Tier 2, which is where you'll find SoFi, is all other NMS stocks. So the way that I understand it, though I didn't try this an infinite number of times, was, if you're going to find SoFi through this data, you're going to be on the NMS Tier 2 selection and searching for ticker symbol SoFi. Now, Cboe has this interesting article that will sort of lead us in a deeper direction, I believe. So starting here, there's been a substantial increase in the amount of trading on the TRF since the spike in market volatility in March 2020. I'm sure we all remember that. In May, this activity averaged near 42%, and the trend continued in June. Coming down here. On a post-trade basis, data for TRF activity is published by Finra. This reporting is aggregated by symbol and market, yada, yada, yada. 2 broad categories, ATS and non-ATS. We were just now looking at ATS. The data generally shows the majority of trading is in the non-ATS category. So the thing we were just looking at would not have the majority of the trading. Now, the non-ATS category comes from broker-dealers that execute a client order away from the public markets. Only about 11 to 12% of market volume is executed on ATSs, meaning this is not driving the recent rise in TRF trading. Below, you'll see there's been very little exchange in ATS market share, and that the non-ATS volumes constitute a larger portion of trades reported on TRFs. Non-ATS volume has grown from around 25% at the start of the year to nearly 35% in May. So this to me says, among other things, that a lot of folks go and they'll Google, what is a dark pool? At some point they'll come to, oh, a dark pool is referred to by insiders and exchanges and what have you as ATSs, alternative trading systems. So then they'll go and they'll say, can I see ATS data, right? And so if that's as far as you go, per this article, you're looking at about 11 to 12% of the market volume, and you're leaving out the majority, which is done on this non-ATS OTC. Now coming down here, you should just read through this article if you want. Again, you could Google it, so just pause and type this into your browser. This is just kind of a bit of a funny thing, but my eyeballs nearly rolled out of my head when I first read this paragraph. But, you know, it's the first sentence that got me, and then the second sentence kind of makes a little bit more sense. But they say, on the whole, having more destinations to trade at is generally a healthy sign for the market. That's where my eyeballs nearly rolled out of my head. But then they say, more competition among marketplaces improves customer experience. However, increased transparency is important for marketplaces in order to foster a competitive landscape. Okay, so that I can more so agree with. So let's look at this non-ATC situation. Now, back here on the Finra site, you can look at OTC non-ATS issue data. And here, this is broken by monthly is how I have it at the moment. You can do it weekly or monthly, but you see back here, you can look at May. Obviously, if we're looking at May, we're going to have to look at IPOE. All right, and IPOE, this is where it gets kind of more interesting to me, and I'm not really going to come to any conclusions today just to be super straightforward about it. This is sort of like just an intro to the dark pools and, you know, what happens in dark pools, or what we can glean that happens in dark pools at a much later date, right? We get this data much after the fact. But we'll unpack this more as time goes on and as we have opportunity to explore these things. But IPOE in May, so just before the merger, there were a total of over 38 million shares traded on the non-ATS. If we look at, if we look at the weekly, or the most recent one, we look at SoFi, it's not showing up. We need to go to tier 2. Let's look at SoFi, tier 2. Okay, they're still saying nothing, and now this is how it seems to be working for me. You know, it kind of like disappears from here, but if there's nothing that comes up as you're scrolling week to week, then that just means it's not there. And if there is something, the ticker will still have disappeared from here, but you'll see the whole list again. And then if you retype in the ticker, then you'll see. But anyway, that same week that we're looking at on the ATS, we see for almost 15 million in total shares being traded just in that week, June 14th. So if we go back here, June 14th, SoFi, 2 million. So here total, we have over 16 million, almost 17 million. And just keep in mind that that's in a week, right? And June 14th, so around those dates, let me go on the daily here. Around those dates, June 14th, we were getting volume of 4 million, 2 million, 4 million, 3 million, 9 million, 7, 5. So, you know, the volume that we were getting in that week, not a crazy like delta there between what's being traded completely in the dark behind the scenes and not impacting the market, and what's being traded out in the open and is impacting the market. So we can do more of this sort of like calculations on these things in future videos, but to me that really stands out as like being quite close together. And also, you know, if you did have folks who for whatever reason wanted to increase the price of SoFi or decrease the price of SoFi, they could effectuate a buy or sell in large quantity on an ATS or on a non-ATS, which is what it looks like is much more likely to happen, and then go sell those directly. So think about it this way. If I buy 3 million shares of SoFi on a non-ATS, that supposedly will not impact the price on the public market in any way, shape, or form. If I then take those 3 million shares that I have and go sell them on the open market over the course of an hour, that's a lot of selling pressure, especially in a stock that doesn't have, you know, a multiple that much higher of daily volume for an entire day in a stock. So that, is an obvious way to think about potential for suppressing the price. Again, these are things that we'll get into more. This is obviously speculation. I don't know that anyone is doing that. But this is just to say, these are ways in which things can be happening behind the scenes, things that aren't totally obvious to folks that we should at least be aware of, I think. Just if we're going to be in it to win it, we might as well understand what it is that's happening. Now, the other thing is the month of May, IPOE, a bit over 38 million shares being traded. If you look at the old data from the free float of IPOE, 79,600,000. And so there's over 38 million being traded in just a month versus, the total float size being 79.6 million. So again, just to say, these are large chunks of what's happening, at least per, like I said, that week of June 14th. And, like I said, I can go through and do some of these calculations. I didn't do them in advance of this video. As you see, we're over 20 minutes already. So I didn't think we needed to go and get ourselves into a 45-minute video situation. And this is hopefully a lot of interesting info to already digest and kind of wrap your head around. It gives you enough stuff to go look at on your own, and then we can dive deeper in future videos. But I thought it was interesting. I wanted to share it and, hopefully give folks something else to look into and contemplate, consider, and share comments about in the comments section below. But that will do it for this video. As always, I appreciate you watching, and I hope you enjoyed your trading week, and I hope that you have a really nice weekend. I'm going to be hoping strongly that our retracement and our bounce off of that 786 holds, even if we have to retest it one more time, and that we then see extension levels start to be hit in the weeks ahead. All right, if I get news from investor relations, you will definitely hear about it on Monday. You can check out my Twitter, which is in the description below. I very well might tweet it over the weekend if I get a response, but I don't really know if they're working on the weekend, so I'm not going to rely too heavily on the thought that that'll happen. All right, well, thanks a bunch for watching. I appreciate it, and I will see you in the next video.